the very first of your R's. You've got too much in the book. I'm not going to try and spend my 15 minutes trying to talk about everything. I'll just talk about the first, which is regulation. And the question that I want to focus on is, what are the lessons that we learn? So as I pointed out, there has to be, after the sort of response that you got from various walks of life, especially citizens, whether it was Occupy Wall Street or other participants in the market, against the kind of regulation that was being done, it was very clear that there was a failure of the system of regulation that was being done there, especially in the US, Europe, UK. And that raised questions about, so what needs to change? I mean, it was clear that it needed to change. It could not go on the way it was. And the question was, how did it need to change? What were the main drawbacks? What had we missed out? And before going into what lessons they drew, I also want to draw attention to how India is trying to respond to the lessons of the global financial crisis. As some of you must be aware, the Government of India, the Ministry of Finance, set up a Financial Sector Legislative Reforms Commission. This was headed by Justice Sreeram Chaulia. It worked from March 2011 to March 2013, 2 years of trying to understand what are the lessons, what is it that we should be doing, how should our regulatory philosophy be structured so that we don't have such a crisis, if and when the time comes. I mean, today we are at the opposite end. Today we can say that, oh, we didn't get affected. But as the economy grows, in about 2050, our GDP will be what the US GDP today is, and our financial sector is going to be as large. And if we continue growing and with new financial firms coming in, it's not unlikely that we would have similar questions, and so our regulatory philosophy needs to change. We were the Commission was acutely aware of the fact that we have, in many ways, the opposite problem that you pointed out in your book for the West, especially the US, where the problem was too much innovation. There were too many things going on, and regulators had not adequately understood the implications of what those new products and new markets were, what the risks in those markets were. So they are at that other extreme. We are at the other extreme where, as Dr. Tharoor pointed out, there isn't enough innovation. I wouldn't call it over-regulation. I would just say that the philosophy of regulation has been to prevent anything unless explicitly permitted. So everything is banned unless a regulator explicitly permits it. So for those who are familiar with finance, say if you want to do a yen euro derivative, it is currency derivative, it is banned. Only when SEBI says we allow it will it be allowed. So it's a completely opposite philosophy. So we are acutely aware of the fact that we are at the other end. Given that as a background, let me turn to my main question, which was, what was the main lesson that we learned from the crisis? What was the main lesson that the West learned? Whether they learned it well or not, I don't know, but that's the lesson we have learned, and we tried to, in the FSRC report, you will see that that forms the philosophy of regulation. The main lesson is that there are many places where markets fail. Markets do not always function properly. There's a market failure, especially in finance, because there is asymmetric information. So the consumer doesn't know what he's buying. The producer knows far more about the product that he's selling. Producer or the seller knows far more about the product that he's selling, and the consumer is therefore at a disadvantage. Since that is the main market failure, what is the need? There is a need for regulation. And what should be the objective of that regulation? The objective of that regulation should be to protect consumers. So at the heart of all financial sector regulation should be the objective of protecting consumers. Whether you protect them by preventing certain products to be sold, and again, this, though I said said that we today have a philosophy where we prevent everything. We should be preventing those things where the consumers could get hurt. So it's not that we wouldn't prevent them, but either we prevent those kind of products where the consumer could get hurt. So if insurance is being sold to somebody who is, a life insurance product is being sold to an 18-year-old, then the consumer is basically ending up paying a lot where he may not get the benefits of it. So that could be a product that is not suitable for him, and so on. So the first question would be to prevent products which are unsuitable. Second, it could be to prevent the failure of firms, or not prevent, we don't want to prevent it completely because that will kill innovation totally, but to reduce the risk of failure of firms, because when firms fail, their consumers get hurt. Let me give the example of a bank. If a bank goes out and gives loans to very, very risky initiatives, very, very risky projects, then the customers of the bank will get hurt if the bank fails. So the job of regulation would be to monitor and reduce the risk of the bank to make sure either that the bank doesn't fail, or if it does fail, then there's enough to pay out customers. And the third is to prevent systemic risk. So the first being consumer protection in terms of the products that are sold to the consumer. The second being microprudential regulation, which is that you try to reduce the risk of failure of financial firms so that you can protect consumers, or you set up systems in place so that the taxpayer doesn't end up paying for them, which is another risk in our system. And third, you want to prevent systemic risk. Systemic risk is when the system fails, when financial services across the board, either because too many firms behaved in similar ways, or because a certain firm was too big to fail or too networked to fail and yet it was allowed to fail. So you want to prevent systemic risk from emerging in the system. And give what the Financial Sector Legislative Reforms Commission did, let me call it FSLRC, as in Indians we are very fond of acronyms. So for those who are from outside India may feel a little uncomfortable with it, but we tend to come up with many alphabet soups. So the FSLRC has proposed that these should be the basis on which we will rewrite new laws. And this is the primary laws. So these are not just changing regulations, but there's a draft Indian Financial Code that has been proposed. And it will take 2-3 years, it will take another 10 years after the law is passed for the body of regulation to be built up. But what we have learned is that if we continue the way we have continued, then there are many, many risks in the system, and these have been emerging more recently with a lot of scams and frauds and failure of financial firms. But those risks could become bigger and bigger, and over the years, we will not be well prepared, and our financial system will not be resilient. So those are the lessons we learned from the crisis, and that's the way we're going to try and reform our system.
The problem about talking about your book is that you can say it so much better, which is why you've written the book, and Natasha has brought it out, and so you can't say it that well. And if you try to be profound, Ila has been as profound as is possible, so you exactly wonder what exactly remains to eat up the time that you've been asked to speak about. So my choice is either pass it on to Madhavan, who obviously always has a good anecdote and will be able to tell you things better, or else pretend that I have something to say. Well, actually speaking, there isn't much that I can quarrel with what Sreeram says. If you have to quarrel, then he would have been there in Financial Express, or I would have been there in Financial Express. So obviously we sort of accept each other's point of view, which just goes to show that there's a lot of agreement there. I was just wondering, when I was reading the book, as I said, it's a very well written book, and I was remembering those articles. I'm not very sure whether, despite good people like Sreeram, we still learn the right lessons from crisis. And that is what sort of was taking me back, and it's been 5 years, 7 years since we had the crisis. We don't, I mean, from the way the debate that is going up in the run-up to the 2014 elections, the political issues that are coming up, and that is what should be concerning us. Not too many of those convulsive changes seems to be having a very useful impact. Despite what Ila is saying, FLRC is a very powerful impact, and a very powerful, good lesson that we have learned. But when you look at what the political parties are talking about, it's pretty much a back, reversible sort of discussion that is going on. It is, there isn't much that the political structure seems to have learned to take the discussion forward. This, I think, is something which is turning out to be a bit of a sad case or a lost opportunity. India is a country with a tremendously young population. It's yet the discussion seems to be about entitlements. We need, as the young population needs education. It doesn't need supports, crutches, but that's where most of the discussion seems to be between those, and that is where we seem to be losing out on a vital lesson which from 1991 we should have learned. Globalization may have had lots of negatives in other parts of the world, but for countries like India and China, this was a very, very major political change which actually brought the chance for a few 100 million people to improve their life chances, which didn't happen earlier. And the 2008 crisis, the way we learned it, seems to be telling us that no, fine, I mean, forget about whatever we had, whatever happened during those 18 years. Let's go back and hunker down to something which predates that. And I think that is the debate that's worth discussing more. But as I said, I'd like a fun discussion where lots of people talk. So I'll stop at this point.
Sreeram, congratulations. It's a very real book. I've always grown in this false belief for a long time that academicians knew a lot, whether journalists know how to tell a story and the twine shall never meet. Or rarely meet, and I can assure you that Sreeram's book is eminently readable, and you've managed to capture a lot of the catchphrases which in my opinion are very important, because when we, Shashi Tharoor spoke about widening the space for public intellectuals, and you yourself spoke about the importance of mass action. And it's very important that we take the story to a larger public through the right articulation. So it's not just enough to know, it's important to exactly convey the idea. So in that sense, I feel it's a very relevant book because it captures the discourse very well. In fact, the introduction to the book, which is sort of leads up to the collection of articles, is an excellent one, because I found it had the gripping quality of a movie script. In fact, it's strange that you mentioned 9/11 and 9/15 in contrast, because the collapse of Lehman Brothers on 15th of September is being drawn as a parallel by Sreeram to 9/11 when Osama bin Laden attacked the World Trade Towers. And both happened on Wall Street in a way. And it's important because we don't see the significance of what one would call financial terrorism. And it's just a paraphrasing of what Warren Buffett called the weapons of mass destruction when he discussed some of the derivatives that are involved in the financial markets. So in that sense, I found the book very relevant, because I was watching this excellent George Clooney movie called Syriana, which is about global terrorism. And it's got this wonderful script where slowly small incidents by very pragmatic business people and politicians end up exploding in an incendiary sort of fashion. So, in a very similar way, financial collapse or I mean, maybe terrorism is not the right word, but financial, what you call adventurism of a kind that causes damage also builds up in small incidents by people who are pragmatic, who are actually far removed from the first principles of values, governance, of public life. That's why it's very important to keep in mind political economy as a subject whenever we do this. I'm glad we brought back political economy into public discourse, and I think credit should also go to Dhiraj, who apparently gave you the idea to this. Because when I read economists like Paul Baran, who's a student of political economy in college, I used to get excited about the idea that politics and economics are so closely interlinked. And I chose journalism as a career because it was a very exciting way of doing the two together. And I also happened to have studied politics in addition to economics. But strangely enough, they are always analyzed in silos. Whether you talk about business shows on television or politics shows, it's almost as if we created a new caste system where we create politics and economics to be two separate subjects, where actually they should be studied together, because the politicians and business people are always hanging out together. Sometimes in the interest of the people, sometimes in things that you could call not so great things, in ad hocism that often results in this. So it's very important to place the whole thing in context. I think you particularly mentioned the repeal of the Glass-Steagall Act as a very important step in which regulation was suddenly dispensed with. We all need a lovely combination of regulation and freedom so that economies do well, because we need fair play and the energies to move in the right direction. But this is a constant act where I think Shashi Tharoor also mentioned very well that we are, what did you say, we are over-regulated and under-governed. And governance is not a matter of writing laws and more regulation. You'll only end up having fine episodes of Yes Minister like that. What we need is active creation. So the point I'm trying to make is, people talk about financial innovation. I think Ila spoke about that. People talk about technological innovation, about which a lot has to be said, because the global financial crisis there is a huge amount of technological innovation that created opportunities and later the crisis. The bundling of securities and other things happened. And so I was in Reuters for 12 years in the thick of the whole technological, in the space where financial and technological innovation was happening, and I was watching it on a daily basis. I heard reports on investment bankers referring to IPO roadshows as beauty parades. So when you talk about beauty parades, cosmetic economics is a logical consequence. So what is lacking here, therefore? You're right in talking about the need for regulation, responsibility, and radicalism. But I think there is also an important factor missing here, which I call the fourth R, which I call royalism, because it's my own slightly snobbish way of looking at things. You need a philosopher king of sorts who manages to take it all together and address it innovatively. And innovation in governance, in my humble opinion, is not catching up with innovation in finance and innovation in technology. And because you'll find that I often call it, if you call business, the business interest as Lakshmi and political interest as Parvati, the Saraswati goes missing somewhere underground as the river she is. And you've got to come up with governance innovation to catch up and regulate, and this has to be real-time, on-the-feet kind of governance. So this is not going to be done by rules and regulations. This is going to be done by intelligent minds which are one step ahead of the people who are trying to be creatively circumventing law. And the other issue that is very critical, there are two issues here which I want to mention that we've been talking about. You just mentioned that you were asked why this book was not, whether it is relevant or not. I would say it's highly relevant for India because we've coped with our own crisis running in parallel to the global economy. The rupee crisis that we faced this year is a direct consequence of the US Fed's unconventional monetary policy. We discussed this at the G20 summit in St. Petersburg, where I was there with the Prime Minister. There is very clearly a link between the two, so let's not say that this is not for India. So we need to understand how the impacts come on India. For instance, we seem to have taken the Kool-Aid of Wall Street style banking here in India. So as we speak, public sector banks are being recapitalized by the finance minister. 14,000 crore, if I'm not mistaken, is going to be pumped into public sector banks. But I don't see the word moral hazard being discussed in the public space with regard to Indian banking. Everybody, we are talking NPA, which is one more to be added to the alphabet soup that Ila spoke of. But behind NPAs lurk some kind of moral hazards. Do we have the wherewithal and the chutzpah to address that? We need to get there somewhere. And so we need to have governance, innovative governance that kind of addresses the issue. And the other point I want to make is that there is a political economy of India running parallel to this. India has also had its own, I am a great admirer of the writing of Michael Lewis, who in the 80s started writing about stuff that happened now. He's written a big shot about this crisis. So it's important to know that this is only, for those of us who've been watching this game, this crisis is a chronicle of a death foretold. Okay? So we need to get into it and understand the minds that work into this. And the key point is that we need to understand a Colgate or a Spectrum Gate or our own public sector banks recapitalization with the same mind with which we studied the global economic crisis through Wall Street, so that we get a more integrated understanding of the political economy. So if Wall Street, casino capitalism is one end of the problem, the crony capitalism is the other end. We need to understand both and get proactive so that we can hopefully make that word society, which you mentioned towards the end, a better one. Thank you.
Sreeram, for inviting me. It's interesting to be back on a panel like this with Subhomoy, Ila and Sreeram, and I sort of went on this journey covering the global financial crisis together, all as part of the Express group, and it was it's like writing the first draft of history in real time, and I suppose future scholars will read this and other even journalistic accounts of the crisis to come up with more scholarly explanations of what happened. As Sreeram has said, this is a sort of explicitly left-of-center book, and I don't always agree with that point of view. Still, and I didn't even when Sreeram wrote this for the financial crisis, except at a time like that, I think it was very important to have all kinds of voices writing and giving their views, because all of us were grappling with an unknown and nobody really knew what the right answers were. More than the economics, what's fascinated me more is the title politics of the global economic crisis. I think the economics is fairly well analyzed in the West, and over here Ila and others are doing a great job at the FSLRC and so on, and drawing up the economic response. But what fascinates me is the politics, because I think what also happened with the global economic crisis, which began in 2008, which is still going on, as Sreeram said. I mean, there's another big event, well, I wouldn't call it event, but another big revolution which is going on alongside it, which is in communication. I mean, 2006-07, there was no Twitter, there was no Facebook, there was no social media. So the challenge for politics has not only been to deal with the economics of the crisis and finding ways to respond to that, but the fact that the mass movements you talk about, you've talked about the big ones, Occupy Wall Street, but even smaller ones, it's so much easier for people to mobilize and make their voices heard. And governments have no choice but to listen to these. And this is what I call, in one of my columns, I call democracy 24/7. Now, no government around the world, whether it's democracy or even authoritarian governments, as we saw in the Arab Spring, can no longer ignore these voices. So there's this great conflict between what seems right economically, and for a lot of lay people, economics is something still very abstract. And I have a lot of time for Sreeram's central argument that how do you explain in a democracy big bailouts to banks when you're cutting entitlements or spending schemes on a majority of people? I mean, how do you explain this? That look, your pension is going to be cut, your health spending is going to be cut, but ABC big bank is going to get all these billions of dollars. I think that's much of the challenge in countries like Greece and so on. I think Sreeram is trying to respond to that particular crisis as well in this book, which I found, which has as he is a scholar of politics and international relations, I think people like him need to come forward to give suggestions on that aspect more than the economics. So I think the economics might sort itself out fairly easily, but I think we're still grappling with the solution to the politics of it. I mean, if you look at India over the last 2 or 3 years, we've had this whole policy paralysis or slowdown in government decision making and so on. It's a response. Okay, you can say it's got to do with corruption and there were scams, but it's also got to do with the response. There have been corruption, there's been scams before, but the responses are much sharper now, the responses are much faster now, they're much louder now. And I don't think in India at least, governments know how to deal with it. I mean, right now we're just seeing this particular government because they are in power, but I think any other government which was in power would also find it difficult in terms of the politics of managing what may seem to be the right thing to do in terms of economics. So we cut the fiscal deficit, but then explain it to your voters, or forget voters. Voters only come up once in 5 years, but now there's a situation where people will come into the streets once in 3 months, once in 6 months. That's a big issue. So I think that is something, that disconnect is something which has really grown since the crisis. And I think the crisis is one part of it, the economic crisis and the slowdown. Obviously, it creates expectations, disappointments, anger. But the fact that communications and globalization has got even stronger in parallel makes it much harder for governments to deal with it. So I think Sreeram's book, in that sense, is an important first step in at least thinking about the politics of democracy in this new environment. And whether this politics of democracy can ever deliver us that golden era of growth, say, of the early 2000s, when India recorded 8-9% growth, the developed countries grew at 3-4%. I mean, is that possible? Given the fact that the world has changed, people's expectations have changed, you cannot do a certain kind of economics. And there is going to be indecision for a longish period of time as governments learn how to grapple with this. So I think it's going to be tough for governments, it's going to be tough for all of us. Economies are not going to recover that quickly as everyone grapples to answers. And meanwhile, we hope that Sreeram and several other scholars in India and abroad give us more wisdom. I think there are plenty of more journal articles and books you can write on this subject over the next decade. I think it's not going away. And we live and learn. Thanks.
Sreeram, I would like to respond to some of the responses and opening remarks made by the panelists.
Which you are flat, which everybody else is indeed, I think, the crux of the matter. I think, as I said before, conceptually and intellectually, there are some lessons which have to do with our notions of what is an economy, what is a market. Can a rigged market where there are some monopolists or oligopolists, that's of course not the textbook definition of a fairly competitive market, but that has been existing both in advanced economies and in our own societies. Or to paraphrase or to rephrase Mr. Madhavan's term from casino capitalism to crony capitalism. I argue in the book that there is a deficit of democracy, which is the core problem. I've argued that it's as much a crisis of capitalism as it is of democracy. And so the lessons, you have to think also in terms of what are the lessons for the social contract between citizens and state. I think that is the level at which we need to operate, because what the casino capitalism of the last 30 years has done is to erase all the barriers between international and domestic. And in many ways, if you see, my book is crisscrossing the artificial boundaries which we assign to sovereignty that divides the domestic issues from foreign issues. Rather, I'm showing how lobbying by Wall Street is linked to protest movements in Chile, which in turn is linked to the price of oil in the Gulf. So what I'm trying to say, at an intellectual level, we need to learn this lesson, and so from an activist point of view, an activist scholar's point of view, my concern is, are people conscious enough and aware enough of these interconnections, and are they drawing the right lessons in order to leverage their social interests? I used Karl Polanyi, the great historian's phrase of social interest, and I've consistently argued in the book that there is something like that, although it's not often well articulated. So if, for me, the social interest is being taken care of, then there's no crisis. At least that's how I see it. But if
the people are being cheated all along the way. The 99%, as the Occupy Wall Street would characterize it. That is where the crisis has been prolonged. I mean, one way of thinking about this: why have we not emerged from it 5 years, despite all the stimulus and the bailouts and you name it? So Sonia Nayyar wrote an amazing column in the Economic Times, saying, we've tried monetary and fiscal policies this way and that way, and it's still not working as per the predictions. And there's an active debate as to whether the bailouts have worked or not. Some are saying Ireland has worked, others saying Greece has tanked, and so on. But the essential point is, for me, the social interests have not been kept foremost in the mind of policymakers. And that is where people need to ask. Obama said this before in debates, saying that, if the people want something, we'll do it. I mean, otherwise, if there's no pressure on us, the ship of the state is just too slow and it's messy. It cannot, respond to these kind of systemic failures and crises of both capitalism and of democracy. So what are we going to see next? I'll again flag that for the attention for all of you to think about. Is it 4.0 capitalism? Is it something else that's emerging which is not yet settled? This is, I think, because we often don't do comparative economic systems. Even in academia, it's become unfashionable these days. What I've tried to do is to bring back the notion of comparative economic systems and to think about different models. So, and the organized left has failed to provide guidance to the masses, and therefore you have all these horizontal democracy 24/7, to use Dhiraj's phrase. I think that's far more interesting, because what it means is that there is no avant-garde or there is no vanguard anymore. Rather, we are talking about, and that may be a weakness as well, because then people say, these movements fizzle out and they won't achieve anything. So at the same time, in the absence of this kind of vertical leadership or kind of dogmatic idea fixes at the outset, which says we need to achieve this outcome and socialism is the goal. I oppose those kind of things simply because we have come through that and we have had very disastrous consequences. But at the same time, we need to generate a robust critique of the way capitalism was bungled for 30 years. So that was my overall point about thinking about comparative economic systems and to foresee the state of political economy of the world 10, 20 years down the line as the dust settles.
All right, I would now like panelists in fact to react more and give us more response. Since Sreeram mentioned about the organized left, please and critique on that.
We know whatever form it exists, I don't think they have the ideas or the responses to what has happened, other than hark back to an era which is past and which clearly failed so many people around the world. But I think the point still remains, and which I'd like Sreeram to explore more, is that what exactly is this response from, and where do you expect this response to come from? Because the organized left has failed in various ways. You are critical, obviously, of the mainstream for various reasons. And there are these large leaderless or small movements everywhere. So I'd like to know, where do you see that change coming from? And if the state is still an entity, I mean, you of course talk about the rise of private corporations and other non-state actors, but the fact is that the state is still determining destinies of people around the world. So where exactly do you see this direction coming from in the state? I mean,
Dhiraj, there is a very interesting phenomenon happening in England of late. Justin Welby, who's of course the former Archbishop of Canterbury, is a big critic of the banks. And he recently started a movement towards savings accounts and savings banks, and how to revive a different interest rate regime that would not be plundering the poor, and that would not be based on the idea of all these fixes that are coming from above, which are largely benefiting bankers and their associated interests. So this is a kind of there are people who have articulated the idea of a banking that has some social value. And I think, people can articulate, people can fight for this. I mean, that otherwise there's going to be rampage, more and more of rampage, and more of this wealth transfer that the panelists spoke about from the bottom to the top. So if you think about this kind of movement, I mean, it might sound idealistic, and people might say, they can't go very far because the entrance interests are strong. In fact, half of the book I'm showing is entrance interests are very strong, very mobilized, and very, very capable of oiling the machine and of getting through. Think about Dodd-Frank, the current fight going on about the big financial regulatory overhaul in the US. I mean, where has it gone? I mean, they've still not issued the rules 3 years after the law was enacted. And they're still fighting about it, and they're still inch by inch. So you could argue that, what is Justin Welby when City of London and Singapore and Frankfurt and Wall Street are all allied and working in clockwork style to prevent any kind of redistribution or to prevent any kind of change in the political economy. So there, I think that's a challenge. I mean, at one level, I'm not describing or being realistic what is objectively happening, but also pointing towards potential futures where people have to, with the backs to the wall, people have nothing left to lose. I've dedicated the book to all the radicals who want to come out and formulate alternative visions. Sometimes it may vary, as we have spoken, justice in this country has a very different connotation from justice in an OECD economy. Right? But nonetheless, the threat of the global crisis is such that it is binding all of us together. In a way, I don't want to go to Marx, but there are these workers of the world unite kind of tendencies that have come up. Dhiraj published a column of mine in a business daily in this country, in which I said, class war is coming back. So I think it shows, and I wouldn't have gotten through with that kind of text, I think, with the Financial Times in London or with the Wall Street Journal. So the fact that we are in India, where we are far more eclectic, where we had a tradition of, as some have said, excessive state control, also means that people do realize that government and the public sphere cannot be, hammered completely to the detriment of society. The public sphere has a role to play; it cannot entirely be the private sphere. But innovation, I totally take the point, should not be hampered, and we do need that. So therefore, it's a trampoline kind of act that I am calling for, where there is genuine market competition, not oligopolies that have been masquerading in the form of free markets, but which are not free. And therefore, societies have a stake in this, and we need to push for all these kind of ends in different ways and forms, situated as per the local context.
It's